You think these are important for a lot of reasons, not just for the individual companies, but to get a fix on where we are in the economy based on what they're saying about loans, et cetera.
Companies, Joe, sit at the heart of the U.S. economy, and they're always really important financial results to watch. I do think they're especially important this time around just because of all the worries about a recession out there, right? And we could start to see that creep into their earnings. How much money are they putting away for potential loan losses? What do mortgage originations look like? What are these CEOs saying about the health of the consumer, the economy? You know, Jamie Dimon's comments earlier this week really struck me, where he said maybe rates have to go as high as 6%. You know, that's not what the market is pricing in right now. So I think it'll be really interesting to see what Mr. Dimon and his peers are saying about the U.S. economy while recession fears have kind of hit a fever pitch lately.
And it's info that we use to try to gauge the Fed and to try to explain the disconnect between what you're looking at right there at 346 on the 10-year and the repeated insistence by most Fed officials that they're going to at least 5 and maybe 5.25 or maybe 5.5, and the market's just yawn. Why do you think that is, Gunjan? Can the markets pivot and force the Fed to pivot, or does the Fed have to pivot and then the markets follow? Can the markets force a pivot?
Someone has to pivot, right? Like neither the Fed nor investors got this right in 2022. It was a huge flop. Who saw rates going as high as they went in 2022? And now again, the market is saying, we don't think you're going to raise rates as high as you say you will. But the Fed is saying, we're going to raise rates to 5%, and we're going to keep them there longer than you think you will, longer than investors think we will. And just after every report, even after the inflation report yesterday, just this divergence grows wider and wider. So I think someone is going to have to blink, right? And someone will end up being right, right or wrong. And that's going to be one of the biggest questions facing markets in 2023. I think one bit of bad news for investors is that a Fed pivot may not be this, saving grace that they think it will be. I think the kind of the wisdom out there is that a Fed pivot would be really good for the stock market. I was looking at some data recently, and in 2001 and in 2007, when the Fed started trimming interest rates and the economy fell into a recession, that did not help the stock market. The S&P 500 was actually down both of those years in the 6 months after the Fed started raising interest rates. So I think investors betting that this Fed pivot would be even good for stocks really need to think again.
I think in one of the last tightening cycles, within 7 months of the last hike, they were cutting already because they were like, oh, my God. And I mean, I don't put anything past the Fed to be able to get it so wrong a year and a half ago. Why should we have all this confidence that they know that they're not going to cut within the next year or so? And it just depends. They could break something. It could be a harder landing than we suspect. There's just a lot of reasons to think that. But for some reason, investors are grasping at that we could have cuts this year, which I can't imagine.
Relying on the 2018, 2019, 2020 playbook, whereas you pointed out, yes, when the Fed started trimming rates, we did see this nearly decade-long uninterrupted rally in the stock market. But maybe this clearly isn't the same economic environment, right? So maybe you can't use that playbook this time around because, yes, we're seeing signs that inflation is easing, but it's still incredibly high. This is a market and an economic environment that we haven't seen in decades. But at times, it looks like investors are using that playbook that worked.
Quickly, Gunjan, if estimates come down enough to where we'll either be in line, or is it the forecast that's going to cause maybe some surprises with earnings? Because I think expectations are down 8 or 9% from where they were. Can we beat those, or it's going to be even worse than that?
Talking to are taking a really close look at this earnings season and wondering what's the next shoe to drop, what's going to crack next. And, we've seen this incredible downturn in the stock market. And they're asking, is this earnings season going to make it worse? Analysts are expecting earnings to fall 4.1% this quarter, the biggest decline since the depths of the COVID-19 pandemic.
All right. Gunjan, thanks. The Journal calls. Money never sleeps. Get going. You got to be there. See you later.